See this support level right here? Oh, okay, I'm going to get rid of this one upstairs. So we got one at 60.87, and then we have this trend line right here. So we've got an axe formation happening right here. So the market is getting squeezed. Trend line is making these highs lower and squeezing them up against the serious level of support on the pound, right? So if I decided to go with the traditional breakout trade, guess what? I'm going to get fake out. Somewhere in here, I'm going to get suckered into selling. I don't know if it's this candle or this candle or this candle. Support is now going to become resistance. So that's why we do that. So if we're looking at the pound right now, we don't really see any. I don't see anything really brilliant at the moment. Let me look at that 4-hour chart again. The best shot, there are two places where the pound could give us a sell. One would be up here at 62, which is only about 20 pips away from it, and which is where we have support here and resistance there. And the other spot would be up here at 62.43. Those would be the two best spots to look for a trade on the pound. So I think someone wanted. Did Sophie want to see the pound? I think Sophie wanted to see the pound. Yeah. So if I were trading the pound, Sophie, I would be looking for a nice naked trading setup right around here. And if it blew through that level and just kept going further higher, I would be looking for a sell somewhere up. And then it finally fell through. It never really gave me a breakout with a retouch here. It was a fake out and then a breakout. That was a really tricky trade. That was a nasty one. Now, here's another principle I want to talk about, which is successive touches on a zone, on a horizontal zone. And you'll notice I'm always talking about zones. The reason why I do that is because that's where I like to take my trades. I like to take my trades on the places on the chart where the market's reversed over and over again. So here's one right here at 63. Now I know we're not up to 63 just yet, but a couple of weeks ago, and those of you that follow my trades know that I took a trade off these. Okay, it was actually here was the first target, the 61.60, and the second one 61.15. And you can see the market went as low as 61 even. So it did take out that second target. So that trade's over. And it was just a simple sell off this kangaroo tail right here. If you don't have the kangaroo tail book, I know most of you do. So that's why I've got a bearish bias on Sanjay on the pound right now. It's just because of that critical reversal level. Remember, I like to trade where the market's reversed in the past. So that's why I sold it there, because it reversed there in the past. And right now, until the pound shows me otherwise, I say we're in the early stages of a downtrend. That's what I'm looking at. Okay, so it looks like we may actually get a move up here to 62 on the pound, which would be great, because I'd love to see about selling this pair there. Okay, so let's go back down to the 4-hour chart and let's talk about breakouts. Now, one of the things that I know when I'm watching my charts is I know that many touches on a zone in quick succession usually tells me that the market's going to fall through. What do I mean by that? Well, here's several touches on the 62.43 level right here. When the market, now this is a little bit different because the market was coming up and it was sort of just resting there. And then it went up again. And it will do that a lot. But this is interesting here because the market came down, it touched it with just 3 candles, and then it bounced quickly. Came back down, touched it with another candle, and then it bounced quickly again. That's fairly typical, and you'll see in the line chart, it bounced, came up, bounced again, and then went up. And that's typical of a market that's going to go away from a support and resistance zone. Now this, however, is something totally different, and this gets to the meat of what we're talking about tonight. Remember, when we talk about those axe formations, we're saying that trend line is squeezing the market up against the support and resistance level, and that trend line is forcing the market to repeatedly hit that support or resistance zone over and over and over again until it squeezes out.